Treasury Secretary just moments ago saying he's not worried about the recent market volatility. It's been sparked in part by these tariff fears. The Dow's on pace for the worst week since March of 23. S&P hovering around correction levels, as you know, and the Nasdaq's well in correction territory. Joining us this morning, Ruchir Sharma, Rockefeller International Chairman and author of What Went Wrong with Capitalism, which is out this July. Congratulations, by the way, Ruchir. Good to see you again. I wonder what you make of, or how you would characterize the administration's ability to hold the market's hand through this transition.
Well, I think what's happening, Carl, is that if you go into what the administration is saying, it's hard to disagree with a lot of what they are saying. I also believe in the fact that the government's role has been excessive, that the spending spree that the government's been on was unsustainable. But unfortunately, what's happening is that the entire drama over tariffs is overshadowing everything else. And I think that that's something which even the Treasury Secretary in your interview is finding it hard to ward off. So I think that's really the central point here, that the tariffs are overshadowing everything else. But otherwise, what the administration is talking about weaning the government off this excessive government spending, and even of taking away this put option that the market seems to believe that every government's given them, which is that on the upside, the gains are there, but on the downside, the government's here to protect you. I don't think that's the right thing. And the administration is right in saying that they're not going to react to short-term stock market movements. So in principle, a lot of what's being said is correct. Unfortunately, I feel that the drama over tariffs is overshadowing everything else.
Right. If you were going to, in theory, delever the government and relever the private sector, why would you then introduce things like a trade war, which would then occlude the private sector's receptivity to that relevering?
I think there's universal agreement on this, which is that this is, President Trump's favorite policy tool, and he can't help himself but use that. But the only hope here is that if they sort of settle on just using reciprocal tariffs, because a lot of governments around the world will be quite happy, or not happy, or at least be forced to reduce their tariff rates, and then you have the law of comparative advantage, which plays itself out. All of us agree on that. The problem is that I think that even Secretary Bessent privately probably agrees on that. But I think that the president is so hell-bent on tariffs as a policy that he can't help himself but use that. But the bigger point here for me, Carl, is this, that the American economy over the last couple of years was artificially juiced up by very heavy government spending, by running deficits that no country in the world has been running. And that was unsustainable. And the idea that America could go on that way and nothing needed to be changed, I think that was just not correct. So in a way, the correction we're seeing in the markets and even in some of the spending patterns, I think was inevitable given this bubble we had in American exceptionalism and in government spending out there. Problem is that because of tariffs, everyone thinks that the only reason the market's weak and the only reason why confidence is slipping is because of the drama over tariffs.
Yeah, I mean, Ruchir, obviously, and the Secretary is right, that a 10% decline in the S&P 500 from an all-time high does not in itself mean that the market is pricing in some kind of U.S. economic calamity in the near term. One thing he also cited, and I do think this is something the market has embraced, is the way that the growth and fiscal sort of standing across the world has changed in the last few months, with Germany taking off the restraints in terms of borrowing and spending, and there's more stimulus out of China. So the dollar coming down as this way of kind of rebalancing the world among the excess savers and the excess spenders. How does that play from here?
Absolutely correct, because, like the dollar went into this year being the most overvalued that it had been possibly in its entire post-Bretton Woods history. So we had a very overvalued dollar. And that's not good for America or for the world. And I think that this is a very important point that the Treasury made, but something that I've been seeing across the world. We spoke about Europe, we spoke about China, but even countries like India and other countries, that in a way what Trump is doing is making the world great again, which is that not just Europe or China, he's forcing these countries in a way, whether for in a good or bad way we can argue, but he's forcing these countries to do things that they should have done anyway. China should be doing stuff to boost consumption and to restoring faith in its private sector. Countries like India should be lowering tariffs because developing economies need much more trade and lower tariffs. So I think these policy steps that have been catalyzed in a way by Trump are in fact good for the rest of the world. And the Treasury was pretty open in admitting to the fact that he doesn't mind the dollar weakening if this is a rebalancing that's going on. So I think a weak dollar is here to stay. And usually these trends last for many years. And I suspect that this trend has only just begun.